I spy with my little eye a trade I'd like to make today. I'm like a kid in a candy store with the options trades, kind of like Veruca Salt, right, Bart? Yeah, I want my options now. I want my options now, Bart. So I was looking at you. Always just crack yourself up. Well, somebody's got to laugh at it. I'm looking at the SPY, that S&P 500 ETF, and possibly making a credit spread move or two on it today. Let's look at the 1 minute chart over on Yahoo Finance. And as you can see, it opened up real nice, got even over 401, got up to what, 401.11 at open. And it's kind of drifted down a bit, and then it's been fairly sideways since. So I was looking at maybe doing a credit spread, a call credit spread for the end of the week. Let's look at that action, Jackson, shall we? Let's look at selling a call for Friday. Whoa. Looking for March 3rd. So that'll be Friday, 4 days to expiration. Looking at a credit spread, a high probability credit spread. So let's go way up here. Let's go way, way, way up here. How about around a 16 delta? There's a 16 delta on this 406. So if we were to do this, if we sold a call with a 63-cent credit and then we bought a call at 36, that's pretty risky. That's $2 wide, Bart. Are you sure? You don't seem sure. Let's just look at it. So we'd have a 27 cent credit times 100 would be $27 with a high probability as far as having this option expire in our favor, or we would manipulate this option before it expired and got out at, I don't know, 60, 70, 75% profit if it does indeed go our way this week. Let's take a look. So we probably need to fill it at 27. And what if we rolled the dice and took our chances and went with 5 contracts? So we'd be looking at $135 bills, y'all, right now, but you'd have a max loss of 865. That's pretty risky. But again, we're at a high probability, right? We're at a 16 delta and it expires in 4 days. So theta, time decay, will be working in our favor. I thought we would just, check it out and see if we can't get a little experiment going on the SPY. Get a little SPY action going. Let's try for this credit spread right here. And right now, we're going to put up $1,000 in collateral and try to collect $140 right before our very eyes. And it is not filling, is it, Bart? It's not filling. Is it down ticking right now? It's still going sideways. 398.25, so down a penny, down 3 pennies. So that's probably why it's not filling. May have to go back in there and adjust it so we can move on to our next trade. Let's replace it so you don't fall asleep on me. You were unable to cancel your order because it was filled. Boom! You're so excited about $140. I am. Now, it doesn't mean we're going to collect all the money, does it? It does not. It doesn't mean we're going to collect that money because we may try to get out of it before it expires at a 50+% profit. So let's see what's up right here. I wanted to take another quick look at what else we have going on. So we only have currently, now we have 3 on the board, okay, with our call credit spread. But before we made that trade, we only have 2 contracts expiring on the same underline, Blackstone, ticker symbol BX, an $85 and an $86 put. And right now, Blackstone is up today. And it's at $90.45, up 1.56% today. So it'd be a good day to sell calls, but we don't have any Blackstone. We don't. They were all called away earlier in the year. So that's all we got on the board right now for expirations on Friday. So I was looking at, what about a a 0 DTE, a 0 days to expiration on SPY. Isn't that just gambling? Yep, that's pretty much just gambling. What if we looked at what's the action on that? So you see here, it's got a little uptick right now to 398.32. So what if you looked at another call credit today? So it would expire at the end of trading today is 401. It's an 88% probability. So if we went here, okay, and we tried to book that, and then we bought a call at this one strike away and got a $8 credit, is it possible to collect $45 bills today? Probably 40 if we wanted to just fill it, right? 40, because every second we wait, time is the ticking, ticking, ticking on the theta. So you're telling me you're going to risk 460 to make 40? I just wanted to see if it's possible to put a couple dollars in our pockets, and then if we were to track this experiment with daily SPY 0 days to expiration along with weekly, where would we be when we're looking at these high probability trades? Is it going to be profitable? Am I going to be too nervous about it all the time? I don't know. So let's find out if we can fill this for $40 right now. It expires today. So we'll be watching this, because if it starts to go against us, then I'll just trade out of it and try to limit our loss, because right now it is not filling, but we're going to let it ride right now. We're going to let it ride, because if Spider ticks back up on the SPY, then it should fill. Currently at 398, 17, 18. Can I hear 19 and 20? Come on. 27. Okay, this thing should be filling any second now. And we got one filled. 1 out of 5 is filled. Come on. Do we hear 5? There we go. We got 5 filled, $40 in our pocketbook. We got $500 collateral. So our risk is the difference in the two, right? So we put the $40 in our pocket no matter what, which then limits our downside to 460. That's a big downside for only making $40 bills. But that's okay, because it should be a high probability trade. But we are going to be watching this thing. We're going to be Hawkeyeing that thing today, just so it doesn't turn aggressively against us, because then we can always close out of it and limit our downside loss on that options trade as well. So that's what we'll be looking to do. And then I want to check back in on some other things. I'm looking at another little experiment to run by you, because I'll be tracking these in a detailed manner on the old spreadsheets, and tracking like these SPY credit spreads, whether they're puts or calls, 0 day and then 1 week. Obviously the trade I made today for Friday is not 1 week, but if we can look at the two together and then separately to see are high probability trades worth it, because one slip up will wipe out a whole week's worth of wins. So I want to take a look at that. And then I also want to look at running the wheel on Google. So I told you, if you watched Friday's video, I was just going to let the $91 put be assigned to me, just to see if we can't work our way out of it. Let's see here. Let's look at this Google notification. And there we have it we were assigned 100 shares for $91. So immediately we got a paper loss. We've got an unrealized loss, but I wanted to see if we can't trade our way out of that back into the green. So now we have 200 shares, because I think we still have a call out there. Do we still have a call out and about on the Googler? I think we do. So if we look at Google, right, our average cost is $92.47 on our 300 shares, and it's currently trading at $90.10. So we're in the red there, but we've collected a nice amount of premium along the way. We've got 6 strategies open on the Googler. We got an $89 put, 88, 88, 400 of those. So 4 contracts there, and 83. Then we have our credit spread. And then in this 2 options strategy, one of those options is a call. So that call is at $99. And then the put on the other side of it, this was our Boston Strangler trade. You and your goofy names, aka the covered strangle. So we've got $85 put and a $99 call in the same trade, which is kind of fun, isn't it? We collected $241 bills to make that trade. And then if we tried to get out of it right now, it would cost us about $182 bills, but that overall would be a 25% return. So we're going to let that ride because both of those are in good shape right now. And as time keeps on ticking into the future, as time keeps decaying, as theta works in our favor because we're sellers of both of these options. So the time works against the buyer and it works for the seller as long as the trade is moving in the right direction. And for this trade, it can move right there in the middle, and then we will expire profitable, 100% profitable on both sides of this trade. Will allow this number to continue to tick up and the percentage of gain to get up, as close to 100% as we want to go, as long as the trade is still in our favor. So the strangle is designed to work both sides, right? So we're way out here at 99 and then way down here at 85 with an underline Google that's at 90, okay? So we're in good shape on both of those. So we'll keep an eye on that. But I was wondering about, I call it the Wheel of Fortune. I was wondering about the Wheel of Fortune on Google. So this video is getting long in the tooth. So I'll regroup, come back, and then try to explain in my limited newbie detail what I'm looking to experiment with for the month of March on the Googler and the Wheel of Fortune strategy. We'll be selling puts and we'll be selling calls, and I want to start that today. So we'll end this video, come back again with another one today, talking about Google and the wheel. So thank you so much. As always, my new best friend in stocks, options, and dividends. If you are not a subscriber, just all you have to do is click on the button. We're going to be best friends, right? So you need to be communicating with me in the comments, liking the videos, sharing this with a lovable friend, and I will see you in the next video.